November 10th, the 245th birthday of the United States Marine Corps. So happy birthday to all the United States Marines, past and present.
Welcome to the Crownsman Show. This is episode 60, and today we are featuring Bellatorum Resources. And here to discuss their services like mineral rights acquisitions, leasing and right-of-way services, and curative title work is their president and CEO, Chris Bentley. He's actually a Marine veteran with over 14 years of service. But before we can continue, let's thank our sponsors. This episode is sponsored by none other than Savanaugh Equipment. Savanaugh Equipment supplies new and used mining equipment around the world, from placer to underground to ore processing plants. They have gold concentrating tables, trommels, and mineral jigs in stock now to take advantage of the high gold prices. You can visit them at savanaughEquipment.com, where you will find more equipment every day. And we're also sponsored by Power Zone Equipment. When you need a specialized team of world-class engineers from oil and gas, pipelines, dewatering, or any fluid handling needs, you want to visit powerzone.com. In addition to their inventory of rebuilt pumps, motors, and engines, they also have an amazing team to design and engineer your systems, no matter the challenge, no matter the location. Get in the zone with Power Zone. Visit them at powerzone.com. Well, let's get on with this episode of The Crownsman Show.
Hello, everyone. Welcome to The Crownsman Show. I'm your host, Jared Downey. Today on the show, we have a guest straight out of Texas, Chris Bentley. How are you today, Chris?
Doing well, Jared. Thanks for having me on.
I'm quite interested to have you on the show because I wondered what happened with a lot of these mineral rights in the oil and in the energy sector, and so you're gonna help me, and by extension help the audience, and be able to tell the audience a little bit about what you do. You're with Bellatorum Resources. Can we just kick off? The word Bellator is sort of an interesting thing, so can we just kick off with what that meaning is, and then we'll jump into what you offer and what you do.
Yeah, Bellator is Latin for noble warrior or valorous soldier, and Bellatorum is the plural form of that Latin root word. So we're a company that's comprised primarily of veterans, who have served in the U.S. military, and so we thought that name was applicable for our company and the way we conduct our business and our ethos here, and so we really. It fits well with our culture, and as Peter Drucker said, culture eats strategy for breakfast. So we've got that culture here of discipline and professionalism, much as the professional soldiers back in the Roman Empire days. So it's fitting.
Where did you serve in the military?
So I was in the Marine Corps for 14 and a half years, did several tours to Afghanistan, several tours to Iraq, a total of 6 tours altogether, stationed all over. I stationed in Hawaii, Southern California, North Carolina, met my beautiful wife and co-founder of our company in Hawaii when I was stationed there. And, the rest is kind of history.
You said about that discipline, and I want to get into what Bellatorum does. And is that a big part, that organization and that discipline? But are there some other things that you brought up, especially the Marine Corps? Just are there values that were really developed that came out of that you bring into the company? More the type of thing that comes to your mind sort of on a daily basis.
Yeah, the discipline translates into a lot of facets of operations in a company, right? This could be discipline and adherence to procedures, checklists, the teamwork, the dedication to the mission, the level of professionalism we conduct ourselves with all of our stakeholders, whether that be the mineral rights owners that we're buying from, our investors, and the institutions that we end up aggregating and selling to in the future. Just every way we conduct ourselves, that culture and those traits that we built during our military service definitely translate well into business. And, I think that veterans definitely have value to add to any organization once they get out, post-military service, when they bring those traits into their new civilian sector organizations. And so I definitely have a bias and a leaning towards hiring veterans here. And whenever possible, we try to do that.
Yeah, no, it's we just had Pipeline Machinery, the big cat dealer, on the show, and I'll send you the pictures of it. I don't know if you saw it. They took their biggest pipe layer and painted it, American Eagles, American flags, and then they have it actually being run on a site by a veteran. It's very there's definitely a theme out of Texas I'm noticing.
Yeah, I think, don't hold me to this stat, but I think something like 97.5% of the U.S. military is from Texas. But that might be slightly exaggerated. But
even if it's over about 30 with that many states, that's quite a high number. I want to, Chris, what Bellatorum does is it's going to be a very educational piece to a lot of people. And so I really want to approach it from a layman perspective at the beginning, and then we can dig into some of the more technical stuff. But on your website, there's 4 services that's right on the homepage. It's mineral rights acquisition, leasing and right of way services, curative title work, which I thought was quite interesting, and then just some land acquisition services. Could you sort of walk us through those in layman terms, just so people understand what it is that your company does, and then we can sort of dig into things a little deeper going forward?
Yeah, no problem, Jared. So first and foremost, we are an asset manager. We have we raise limited partnership funds. We have investors, and our primary bread and butter is investing in mineral rights and oil and gas royalties. We use those terms interchangeably. And so while we're aggregating, we only have about 30 million assets under management right now. And so those other services, we have a team here of, we have a geologist, a reservoir engineer, and a handful of petroleum land managers. And so we have the ability to go and provide these same services that we do in our fund management, that, once we deploy all the capital and we've got these assets under management, we use our team here to also provide services to family offices, other firms, E&P companies, and we go out, we can acquire leases for them. We can acquire pipeline easements. Same for other mineral owners that maybe don't have a back office team that's set up to manage these assets. So those are other ways that we generate revenue for our company. Ideally, we would like to scale to where, we move strictly into mineral rights management of managing a fund for our investors, and that we have a large enough capital pool in order to justify just investing and managing in our own portfolio. But at this time, we offer those other services just to generate other revenue. It does help with us getting more industry intel, as you can imagine.
I was going to say, that seems like it's that seems like it's great R&D.
Yeah, absolutely. So we definitely get that benefit from it. There's other ways to conduct that R&D. So if we get the scale that we'd like to achieve, we think it'd be better off for us and for our investors to be 100% focused on managing an investment fund only. And we think we'll get there. I mean, we went from, in 2017, our very first investment partnership was literally only $50,000. And here we are in 2020 with just under 30 million AUM.
Wow.
That went from 1 investor to 97 investors. So I think we can continue this track record of both success and scaling. And, that's the goal for this next fund that we're raising right now, is to hopefully get to 100 million. And, we actually have the capacity with our current team in place to manage probably up to 250 million without having to hire more resources or, do anything different than what we're doing now. We generate deal flow on a daily basis. We're contacting royalty owners all over the state of Texas every day and providing liquidity to them. And so we actually have more deal flow than we have capital. And as you can imagine, in today's environment,
Yeah.
That's probably a problem that a lot of asset managers have.
I wanted to clarify something, Chris. You're not limited to Texas, right? In this, I just don't understand, like, rules and regulations and all that stuff in the industry. Is there a limited to? Are you limited to the U.S., to the state? What is sort of your?
This asset class is unique to the United States. You can't go
Mm,
buy mineral rights in other countries. The you know so the We are not limited to Texas by any regulation or anything of that nature. We actually prefer to only buy in the state of Texas right now because of the best, in my opinion, and arguably, most experts' opinion, the best plays are here in Texas. You have the Permian Basin, the Eagle Ford Shale. In East Texas, you've got the Haynesville, and then up in the Dallas-Fort Worth area, you have the Barnett Shale, and then even the Fort Worth Basin, which is a little bit bigger, and then in the Panhandle, you've got the Anadarko Basin, and the laws in Texas are so favorable to the mineral rights owner compared to other states. So, for example, in Louisiana, they have a different, their laws derive from French law. Here in Texas, our laws derive from Spanish law, and then other parts of the country, they derive from English common law. And so we found that, for several reasons, operational efficiency, tax purposes, and, the laws being favorable to the mineral rights owner, for right now, we just like to focus on Texas.
Texas is. I was listening to a show a little while ago, and they were talking about that Texas is, out of all the states, it's. I think I'm going to use this 97% stat again. It's like, but it's a huge portion of land in Texas is privately owned, just by a huge comparison to any other state. Is that right? So that's why there's so many private owners of these mineral rights. Do I have that right?
You've absolutely got it right. In our direct neighbor to the northwest, New Mexico has a lot of federal lands, and there's a lot of producing properties on those, and the federal government gets the royalty on those properties, right? So we've got a lot of private land here, huge ranches out in West Texas and South Texas, and then also a bunch of townships in these small towns all across Texas where smaller interest owners are. And so that's where our bread and butter really is, aggregating these smaller interests and being a liquidity option for these owners that don't get a lot of attention. So
Right. Well, there's a couple things, and because when I was doing my research, there was a couple things that were popping up that I noticed. That there's a lot of people have actually been trained to never sell their mineral rights. It seems to be an actual bit of a theme when you're doing so. Sort of where does that come from, and then how do you approach it and look for those opportunities when it's sort of in a bit of a culture to not let go of those mineral rights?
Look, it definitely is a part of the culture, Jared, and rightly so. I mean, these are extremely valuable assets that have long-term value, right? And so we find that most of the time, we're making unsolicited offers. So let me back up. We go out and we say, hey, are you willing to sell? 99% of the time it's no, I don't want to sell, right? So it's a volume game that, and
Right.
and then when you get a willing seller, you need to be able, as a company, the company acquiring their asset, to be able to move quickly, because they usually have an immediate need, right? And this may be their only asset that they can monetize to meet their needs. And so we take that very seriously. We're not out making super lowball offers and just trying to get, things, steal mineral rights, so to speak, for pennies on the dollar. We make competitive offers, but, we obviously are a liquidity option, and we have to make money as well for our investors and for us. So we do that. It's a volume game. We just reach out to them, and people call us. We do search engine optimization, social media marketing, the whole nine yards. And so that's basically it. Is, this is an illiquid asset class. There's not a Zillow of mineral rights. It's not like the mineral rights owner can call up Remax or Century 21 or whoever and call a real estate agent. This is in fact real estate. It's considered real estate, but it's subsurface. It's not like you can put a sign in the front yard and you can just look up on Zillow how much the property's worth. So it takes scientists, reservoir engineer, geologist, and a petroleum land manager to figure out the value. And that's what we have here. And that way we're able to provide liquidity for these mineral rights owners when they want to sell. Did that answer your question? Maybe I didn't.
It did. But it leads me to another question, and it's something that I was wondering, again, doing the research is, and I was picturing myself, again, knowing that sort of specific to Texas, that landscape where these huge ranches, huge swaths of land that are privately owned. It's not an all or nothing game either, is it?
No. These things have been carved up, and you've got an undivided interest, so to speak, in the mineral rights, and something that may have been a 1,000-acre plot of land that in the family's history they owned all 1,000 acres of surface and mineral rights. Over time, whether it was through inheritance or a will, hey, I give 20% of my mineral rights to my granddaughter, or to my brother, or whatever, right? These things get diluted and carved up over time. And quite honestly, 99% of the time, the mineral rights are severed from the surface, and the person who lives on the surface is completely unrelated to the mineral rights owners now.
Yeah, I wanted to talk about that. I saw some of that. Is that the mineral rights and the surface rights? Sometimes over time, the surface rights might get sold, and then it sometimes gets lost track. So you need to go back and trace it. Or is that part of the services that you're providing, just putting it all back together?
Yes, absolutely. No, sorry. We do not put it all back together with a surface. We do not buy surface properties.
Okay.
You're interested in the mineral rights. But we are interested in aggregating all of the mineral rights owners in a lot of cases, and bringing that whole mineral estate, as we refer to it, back into one ownership in Bellatorum's fund or partnership, the entity that we're managing to acquire these assets. So depending on the level of capital we have, we obviously don't want to concentrate too much capital into one property, but we do like to aggregate and bring as much of the mineral estate back together as possible.
I want to get into who your investors are and sort of how they're looking at it. But I also want to clarify something else too. These mineral rights, are some of these they're not operational yet? Is that right? I just wanted to clarify that.
That's not right. So
okay.
Yeah, and no worries. It's a common question. So it's kind of it can be confusing, because you might often hear me say we buy ahead of the drill bit. But Jared, sometimes what I'm really referring to is the future horizontal development, what's referred to as fracking a lot, where you come in and horizontally develop the deeper zones, such as the Wolfcamp A or Wolfcamp B, which you might have heard of in the Permian Basin. But when we buy those mineral rights, they already have some form of production on them, whether that be one existing horizontal well, or maybe an old vertical well that was drilled in the the 1950s out of the Sprayberry Formation, which is shallower than the Wolfcamp. And so everything we buy, every single royalty interest or mineral rights property that we buy, has some form of existing cash flow on it. Now, depending on the areas we buy, there may be future upside potential, which is the case in the Permian and some areas of the Eagle Ford Shale. But the other areas, up in the Panhandle and the Barnett, as I mentioned, it is strictly a discounted cash flow analysis, and we're just buying to get a return and yield on those properties. With some of the Permian Basin properties that we buy, for example, we are hoping that while we own it, they will come in and drill new wells on that property and increase the cash flow and the value of the property. You can almost think of it like adding granite countertops to a house that you buy
Yeah.
to add value. When we buy it and there's only one or two existing wells that are kind of old on there, they're throwing off some cash flow. But when the operator comes back and drills, several new wells on the property, on the mineral estate, then that ups the value and shows, potentially for our exit strategy down the road that it'll increase the value and enable us to achieve capital gains as well.
I want to spin it around a little bit, Chris, and I think we might want to go back to just that process of you kind of who the seller is. I might want to touch on that a little bit, but I kind of want to spin around to that investor side as well, because of course someone listening to it now goes, okay, so you're buying these mineral rights, you're putting them together in aggregate. Now, what's the investor's perspective on this? What are they seeing the opportunity and even who they are? It doesn't sound to me like this is someone that you throws you a few $100 and they're in on it.
No, so we only are allowed to take accredited investors, right? And we have a third party that verifies their accreditation. So if somebody were wanting to invest with us, they would have to be, an accredited investor, which means, they have over $1 million of net worth outside of their primary residence. If they're single, they make $200,000 a year, I believe it is. Don't hold me to these numbers exactly. That's why we hire a third party to verify their accreditation. And I think if you're married, you have $300,000 in income if you're married. So there's several things they have to do. They have to prove with tax returns or a letter from a wealth manager or something along that nature. And that third party sends us a certificate saying, hey, this investor is accredited. You're allowed to take their capital. And then they would fill out our private placement memorandum and subscribe with us. So our minimum investment right now, we lowered it to $10,000 from $250,000. The reason we did that is because we're in an election cycle. People are fearful. There's COVID-19 stuff. Oil went, back in late April, early May to negative prices and really low, prices for a few weeks in the teens. And so that causes fear, right? So in order for people to get comfortable with what they perceive as increased risk, we lowered our minimum investment for this fund. But the reason I say that is because you asked, like you kind of mentioned about the amount of money each investor does. I mean, our average commitment has been, I believe, in like the $80,000 range. We have the discretion to take less than the minimum in the previous fund. So, for example, our minimum, I believe, in our last fund was $250,000. I had a couple investors that came in at $1 million or more, and then some come in less than the $250,000. And so I think the overall average was around, actually, you know what? The average when you take all of our investors and the amount of AUM we have, we're still over 200,000. So
once, because you get those high ones that skew that average. Yeah,
exactly. Yeah.
Sorry, go ahead.
No, and you asked like what type of investor. I mean, we have several family offices, but these are usually all high net worth individuals. We don't have any institutions per se, like a private equity firm or venture capital or things like that. We've found that it's better to just, go raise capital with individuals. I after serving in the military for 14 and a half years, I have the utmost disdain for bureaucracy. And I don't think it's sufficient. And so, I know that these big institutions have their place in the world, but it allows us the flexibility to be nimble and to generate value and create alpha for our investors when we go direct to the accredited investor market.
So you really do have a direct relationship with these investors.
Yes. Yeah.
There's a term that I've heard it, but I've never had it explained to me, which is for me, just personally, which is so nice for this show, because when you're doing research, even when I was doing research for this show, there's a lot of terminology that gets thrown around, and to try to piece together all the 5-minute videos explaining the terminology, you'd be days and days just trying to figure it all out. There's a term that's called blind pool capital funds. And I wanted to understand what that was. So can you just sort of walk us through what that terminology means?
Right. So you got to compare us to real estate investing, right? So a lot of times with real estate investing, if you look at the offering, the manager will say, hey, we've got this property, this apartment complex, or this raw land that we're going to go and develop, and we're going to build soccer fields or whatever, right? So they've got a plan, they've identified a property, and so when you invest in that, you know exactly the zip code, the street address, what you're getting, right? And that does not work in this asset class. As I mentioned earlier, when a mineral rights owner wants to sell, they want to sell. So we need the money sitting in the account ready to make the offer and acceptance and close the deal. So what we found the best way to raise capital in this for the operational efficiency of the business and the ability to get the best deals possible for our investors is to do a blind capital raise, meaning we don't have any assets under an option period, or, and most mineral rights owners that want to sell would not be willing to sell or to lock themselves into that long of an option period for you to be able to go create a new partnership, go out to market raising capital around that asset, that particular portfolio or property. So what we do is we go say, hey, look, we've got a proven track record in this strategy. Let's see how much capital we can raise. Okay, we raise this amount. Now we can go out and, based on the deal flow we have, go buy the properties we want to buy. So that's the blind capital raise versus, I don't know what the other term is, but
yeah, I know what you're talking about. Yeah, I've seen that. I'm here in Vancouver, and you'll see you'll see like 3 or 4 houses, and it's like, and I'm not an expert on it, but they basically they don't give the owner any capital. They just lock it in if they can put together a deal, so that owner is now, their property is locked up for sometimes like 60 days. So, and I was just picturing you going out to, I grew up in the country, so around ranchers and that, and I'm just picturing you going up to a rancher saying, okay, I'm going to tie up your property for a couple months, and then I'm going to go all over looking for people who want to buy it. It wouldn't work.
Right. And there's no guarantee that you can raise any money at all, or even the amount of money to take that property. So, it's not fair to the property owner, and it's quite honestly not good for the investor. I get that a lot of investors want to know exactly the exact property they're investing in, but so for us, the investor needs to be comfortable with our strategy and the asset class itself, and then commit money based on knowing that they have the trust and faith in us to then go and deploy that capital into good properties. So again, we found that is the best way for us to achieve the results that we've achieved in the past, and hopefully can continue to do so.
I wanted to just circle back to something I want to talk about. It, I think, ties in a little nicer than how I was originally going to structure it. Because now, if I'm an investor and I understand, I think, and you definitely touched on at the beginning, but what is that process of that from initial approach to the closing? You mentioned the aggregation of the mineral rights, different properties, and everything. Can you just sort of walk us through that first step from the moment that you talk to that seller, right through the whole process?
Sure. It's when we consider our it's kind of an inverse relationship to normal business, right? Usually the person buying a product is the customer, right? Well, our customer is the mineral rights owner, and we're trying to buy what they have, right? And so, but we view them as the customer. So our customer relations and customer service, if you will, is very focused on the mineral rights owner and their experience in dealing with us. So, when they call us, we immediately work to get them an offer, a solid offer that they can take to the bank and depend on that we're going to be able to close that as quick as possible, within hours to, no more than to 48 hours, right? 2 days. So we want to get them that offer. And then we also want to be able to close quickly. This closing process is not like normal real estate where you go to the title company and, you fill out 375 pages worth of paperwork with your realtor and your broker and a notary and all these people sitting at a table at a title company. There's no title company for mineral rights where you go get your title policy and you do your closings and you go to the money sitting in escrow or whatever. So we try to do all the upfront due diligence before we send out letters and contact mineral rights owners so that we have the ability to close quickly. So our final checks are, when I say checks, like on our checklist to make sure the property is good to buy, is making sure they haven't sold it. There's no tax liens on it, various things, rechecking the title one last time, making sure there's no geologic anomalies that have popped up in the last time since we've done our due diligence, and the engineering and cash flow analysis. We've got our checklist that we hit, and then we can close very quickly. So a lot of times, depends on where the person lives. If they live anywhere within, 12 hours of our office, we put a guy out on the road and they go meet them and pay him with a cashier's check in exchange for the deed, then immediately go to the courthouse and file the deed of record. So we're actually giving them that in-person closing, handshake, exchange deed for payment. If they live in a place where we can't accommodate that, then, we use FedEx or whatnot. We send them the closing documents, they sign them. In those instances, a lot of times to give the mineral rights owner the peace of mind that we are going to pay them, we will use an escrow agent so that their deeds, for their property are going to the escrow agent. Our money's going to the escrow agent. Once the escrow agent has received both the money from us and the deed from the owner, he pays the owner and sends the deed to Bellatorum. Then we send it to record it in the county. So, and then after that, once we own it and it's filed of record that we own the property, there's a process. We got to notify the operator. So for example, let's just say the mineral rights owner's name was Bobby Smith, and Bobby Smith had some mineral rights out in Midland County, Texas. That was, let's say, Exxon was the one paying him his royalty check every month. Well, once we buy that property from Bobby, we record it in Midland County, courthouse. Once it's recorded of record, then we notify Exxon and say, hey, stop paying Bobby Smith and pay Bellatorum because now we own the property. So you got to look at it like we're the landlord and Exxon is our tenant, and what they're paying us in rent is a share of the revenue that comes out of the ground every month.
Right. So, and that leads me to the next question. And apologies, Chris, because it's a detail that I don't quite understand, and obviously I don't get a ton of opportunities to ask people in your stream. So now, are you, for lack of a better term, are you flipping these rights sometimes, or is it almost always you operate as the landlord and add to your assets?
Well,
or is it both?
It's actually both. It's we aggregate and eventually sell, right? So it's not like a quick flipper, right? But where the value is added, there's a food chain, so to speak, in the industry, and the higher up the food chain, the bigger the deal they want a look at, right? So they're not going to look at $50,000 deals, $100,000 deals. They're going to wait for an aggregator like Bellatorum to put together a portfolio that then is worth their time to deal with. And they also operate a little bit differently, right? They're going to want 30 to 60 days to close and to evaluate. So we're patient. We can deal with that. We're not the mineral rights owner that needs immediate liquidity. So I think that's where we add value up and down the value chain, right? You think the value chain starts with the actual mineral rights owner who owns the assets individually, the smaller asset. We're a liquidity option for them in their time of need. We're an aggregator for these larger institutions that want to buy these assets, but they're not going to focus on these smaller deals. So I think that we add value up and down the food chain, the way we conduct business, both, on the full spectrum of that food chain. I think we add value up and down again. And so does that answer your question, Jared?
Yeah, it really does actually. It's something I was actually I wanted to discuss it earlier, and then it sort of slipped, and I wanted to understand that because I think it's very important. I wanted to, before we're kind of getting to the tail side, and I just wanted to I wanted to clarify, Chris, who can invest, because I understand that you're primarily in Texas. You could operate outside in other states. But now, what about the investor? Of course, I'm based in Canada here. Can somebody from Canada invest? What are the regulations on that?
Absolutely. It's all how we treat your distributions and taxes. So if you're a U.S. resident with a Social Security number or tax ID number here in Texas, then I don't have to withhold your taxes. If you're a foreign investor, depending on where you're from, I might have to withhold taxes, and so it's just a difference in paperwork and subscription process. But the Canadian pension plan is actually one of the largest investors in mineral rights. They're not invested in us in our fund, but they're guys further up the food chain,
up that stream,
that are backed or substantially backed by the Canadian pension plan. So that I know that wasn't exactly what you were asking, but yes, we can take on investors, but they have to be accredited. They have to understand, be a quote unquote sophisticated investor, and that is defined by the SEC and FINRA. What that level of net worth is. And so those rules would still apply.
I also wanted to ask, it's that direct relationship with investors. I mean, I understand you've got or I would think that you have an internal strategy that you bring forward when you're talking to the rancher, you're talking to the investor, you're assessing these mineral rights. I mean, that's what makes your company successful. So, obviously, I can't just pick up the phone and say, hey, tell me all your strategy. But if I am an investor, one of these high net worth individuals, and I'm accredited, and then I want to get more information, what is that sort of process? I'm sure there's some sort of NDA and things like that, right?
Oh, well, look, if you want to know more about if you're a potential investor, is what it sounds like you're asking, and you want more information, I don't even need to see it, get you to sign an NDA for that information. Now, depending on what questions you start asking, I may say, hey, look, now you're getting too much into the secret sauce, and I may just decline to answer those questions, quite frankly, depending on how I know you or the relationship we have. But if you are an existing investor and you need information, you absolutely have access. We have a third-party administrator. I like doing business with local folks, and so I like the small business entrepreneurial folks. So I'll just say up front, we don't use big four accounting firms like Ernst & Young or whatever. We use a local accountant here. We use Whitley Penn, which is a decent-sized auditor. So we get audited financials every year, which get shared with the investors. We get, we have a third-party administrator who monitors the bank account activity and kind of has like a fiduciary duty to the investors to make sure that Bellatorum is not, sending money to the wrong place or whatever. And so we use the money to buy the assets and cover some of the expenses, obviously, of doing business. But our third-party administrator, let's say you needed more information than what I share in my monthly investor updates, I send out an email every month. We try to do quarterly calls. That's been challenging, getting everybody to be able to get on the same schedule. Usually what I do, if I do a quarterly call on Zoom, we'll record it and we'll share the recording with those folks who didn't get to make it. But, as far as picking up the phone and calling me, I mean, obviously that wouldn't be efficient for the highest and best use of my time, but we have resources that enable the investors to get stuff when they need it. I mean, I'll give you an example. The third-party administrator, they're full-time on our, on call for when an investor needs a copy of their capital account statement, their K-1s. Hey, I misplaced my K-1 from last tax season. Can you resend that to me? Things like that come up all the time. And we take absolute pride in trying to be very responsive in delivering the needs to our investors. I get complimented all the time on how transparent our company is. I mean, I've even had investors tell us that we're too transparent and that we communicate too much. They weren't saying that in a negative way. It's just like, hey man, you might want to spend less time communicating to us and focus more on the business, because we've taken such an effort to make our investors feel comfortable and get all the information they need. So.
Yeah, no, and I talking to you, leading up to this interview, I got that impression that you really, it's not just spoken. It's really, there's some action behind wanting to communicate with those investors. And Chris, I want to sort of circle back to the beginning with you serving in the Marine Corps for 14 years, and I'm always, because I didn't serve in the military, so obviously I would have served in the Canadian if I had, and I'm curious, when you go through that level, you go through multiple countries, you actually were on tour, and going, and just that whole huge portion of your life. And I've always been curious, starting when you're young, that first day you walk through the doors of the military, and then you leave. Now, of course, when you're young, you develop anyway, life experiences, but military would seem to expedite some of that development, that discipline, that consistency, and that. How different were you? And I apologize if this is a hard question to answer, but how different were you as a person, as a leader, however you want to answer it, from even after a few years of being in the military? How does that sort of grow you as a person, do you see?
Well, so you said how different was I
How
back then?
different? Yeah. How did it,
And I will tell you,
not just
first
develop?
and foremost, Jared, I was in size and body mass, I was half the man I am today back then. So,
So physically,
yeah. So, a lot leaner. That's the main thing of how different I was. But no, to be serious, growing up in Texas, it's kind of part of the culture down here. I wanted to be a Marine. Look, I'm not one of those chest pounding guys that, hey, the Marines are the best or this, but at the time, we're all a team. All branches of the military are represented here at Bellatorum. But for me, when I was an 18-year-old kid walking into the recruiter's office, I only went to the Marines. I didn't go shop around to the other branches. I knew I wanted to be a Marine. They had this mantra of, hey, do you have what it takes? Whereas at that time, some of the other branches were like, hey, what can we give you to join and sign up? And I don't know, something just drew me to the Marine Corps style of challenging me rather than trying to woo me into their organization. And so it wasn't even a choice. It was, hey, will you take me? What do I got to do to join? And how fast can I get to boot camp? And so that I enlisted right out of high school. But it definitely was a big influence on me. There are so many things that I use from my military service that I think translate well into organizational leadership and management and operational efficiency. When I use the word aggressive right now, I don't mean like that in a negative way, but we are aggressive in accomplishing the mission. We don't wait around. We don't, I think I'll go play golf today instead of doing my job. Like we are dedicated to the mission here. We look at our job as a mission and by God, we are going to accomplish the mission and get it done. And so I think that just translates well into any business, quite frankly, but especially in a business like ours that's so fragmented, inefficient. There's a lot of information asymmetry. It's disorganized. And you think about, serving in an austere environment like Afghanistan or Iraq with unclear goals and outcomes and things, some of the things we experience, not to get political, but, the wars overseas that we've been involved in, that it's not like there was a playbook exactly on what to do. And so being able to go out and operate in a highly fragmented environment like the mineral rights space, I think our team does it well. And I'd put them up against any other mineral rights team out there and bet the ranch on them,
Yeah. No, that's a good answer. And there's a reason I asked it, because I've seen one on one hand, it's really, military has really transformed who they were as a person. It's added actually new elements to them, where it seems from what you're saying, it's really what it did is you already had a focus and it really enhanced that and brought it to a high level.
Absolutely. I think the discipline in operational discipline, adherence to standard operating procedures, adhering to checklists, making sure you don't miss steps, it leads to quality, efficiency, cost savings. I mean, the whole 9 yards. I really, I don't want to sound arrogant or like I'm bragging too much, but I do think that those things set our team a notch above the competition,
Yeah. Well, I mean, and I see it. And the reason I wanted to bring it up a little bit more towards the end, of course, we wanted to focus on Bellatorum, but there was a real efficiency in putting this show together. And I mean, it allows, even a show like this, is when you have that preparation and that organization, it allows you to be much more relaxed. And I see how relaxed you are in the show. It allows you to have control of where you're at. And it sort of does it when you say, because we sort of live in a fragmented society, again, not to get political.
Especially in 2020, right?
But that there is that, controlling the things that you can control and being organized about the things that you can organize, it makes such a difference. And even in the show, just being able to communicate directly to the point, it actually makes a more in-depth conversation. And so I want to unpack it a little bit more before we wrapped it up.
Yeah, that's all right. I appreciate it, Jared.
So, just sort of as we're wrapping up this interview, Chris, I think you've got to give a shout out, because we're releasing this on November 10th. And I didn't actually realize the significance of that date. Of course, November 11th is a big one. So, I'm going to let you take the floor to sort of wrap up the episode.
Oh, I appreciate that, Jared. Yes. November 10th, the 245th birthday of the United States Marine Corps. So, happy birthday to all the United States Marines, past and present, out there. I wish you the best, and just happy to be a part of the legacy.
Yeah, thanks, Chris. I'm going to make sure to have your information up. Of course, I'm Canadian, but we're very much neighbors as a country. So thank you for your service. It's been a real pleasure to have you on the show. Just the timing we're releasing it November 10th. Of course, we filmed it earlier, but it's really a special episode for me. So thank you for coming on the show, and thank you for unpackaging a very interesting stream that you're in, and an important stream for both investors, for mineral rights owners, and for the industry. So thank you for coming on the show.
Thanks, Jared. I really enjoyed it. It was a pleasure, and I really appreciate the opportunity.
And thank you, everybody, for watching. Unless you were already an expert in the field, I don't know how you couldn't have learned a lot from that episode. It was a ton of fun for me. Keep watching. Please keep suggesting guests, because, I mean, we, like in any stream of life, again, we've mentioned a couple of times, not to get political, but you can get in your little bubble. And when people like you who are watching introduce new guests, new companies, it just expands the amount of information that we can share. And so I really appreciate Chris coming on, and we appreciate people that are recommending guests. Keep watching. Please subscribe. Thank you to our sponsors, and we will see you on the next episode of The Crownsman Show.
Thank you so much for watching. Please remember to subscribe to our YouTube channel and follow us on Facebook and LinkedIn. Also, if you'd like to be a guest on The Crownsman Show, Mining Now, or Crownsman Energy, please contact us, info@crownsman.com. Again, thank you to all of our sponsors, and we will see you on the next episode.